Today's video is sponsored by Figure Markets, the place you go to earn yield and borrow against your Bitcoin and Ethereum. Figure Markets crypto-backed loans let you borrow against your Bitcoin or Ethereum with up to 75% loan-to-value ratio, one of the highest in the industry. Whether you're looking to reinvest and double back down into more Bitcoin, cover everyday life expenses, or just have cash on hand, these loans make it simple. Interest rates start as low as 12.5% with no credit checks, no long applications, and no prepayment penalties. And if you're worried about sending your Bitcoin as collateral to somebody you don't know, well, Figure Markets is a subsidiary of Figure, the largest non-bank HELOC lender in the US, with over $14 billion of home equity unlocked, and founded by Mike Cagney, who founded SoFi. Sign up today at figure.com/realvision and download the app to explore all their offers. Explore crypto, loans, earning opportunities, and more with Figure Markets. Hi, I want to talk to you today about my friends at Bitwise and why they're the best crypto asset manager out there. I've talked on the show often about how crypto is reshaping everything from finance, portfolios, and even macro. Everything's ramping up. We've got tailwinds in DC, interest from TradFi, and growing optimism. But smart investors see all of this and focus on the how. What's the savviest way to seize this moment? And that's why so many investors I know are working with Bitwise today. They've been all in on crypto since 2017. They're OGs. They've got more than 30 products to help investors like you get access to whatever they need or want. They've got a team of more than 100 across the US and Europe, and they have over 10 billion in client assets. You know, a lot of people know Bitwise for their ETFs, how they manage the world's largest crypto index funds and the wide range of crypto ETFs they have. But not as many people realize, Bitwise manages private alpha strategies too, and has SMAs for large investors, and is one of the largest institutional Ethereum staking providers. They really do everything. These guys are true OGs in the space, and they're good friends of mine too. So please go and check out Bitwise. They're really excellent. Go to bitwiseinvestments.com and see all that they've got to offer. That's bitwiseinvestments.com, or just email them at james@bitwiseinvestments.com and let them know that Raoul sent you. Anyway, there's a million ways to access crypto. Explore how you can access it best with Bitwise. And remember, carefully consider the extreme risk associated with crypto before investing. Anyway, thanks so much.
Hey everyone, sorry to interrupt, but this is the cheesy podcast bit that gets on everyone's nerves, but it's really important to me. Please, if you can like the channel and also subscribe, it helps me a lot to get the best guests in the world for you guys. So click like and subscribe. Appreciate it. Thanks.
Hi, I'm Raoul Pal, and welcome to my show, The Journeyman. And I think you all know by now, it's where we travel on that journey to the nexus of crypto, macro, and the exponential age of technology. Now, the world has been changing super fast, and I've talked about this. The rise of the retail investor as distrust of Wall Street has grown is a significant part of the world that we live in now, and it's only growing. Crypto has been a large driver of this, but also movements of social media have changed the nature of investing entirely. And what I really want to do is find the expert on all of this, the person who actually made it all happen. Vlad from Robinhood is one of the people who've enabled and democratized access to the tools that retail investors need to survive and thrive. He's changed the landscape of investing, and I want to talk to him to see where this is all going. Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together. Vlad, good to see you on Real Vision, my friend.
Good to see you, Raoul. Yeah, great to be here.
Yeah, fantastic. Listen, there's all sorts of things I want to talk to you about. And I know you've been kind of on a few interviews recently, so I'm sure we'll go for some different tangents as well, because we had a lot of commonality of interest. But one of the things that I might have asked you in the past, but I really want to know is, why the hell did you think of disrupting such a traditional and tough industry when you started Robinhood? What on earth made you think you could do it?
Yeah, I guess I didn't really think about it from that angle. It was mostly about building a cool new technology that didn't exist before. So my co-founder Beju and I were in New York at the time, building algorithmic trading software that we then licensed to banks and hedge funds. And then through building that software, we figured out that it was possible, theoretically, to place a trade and process it for no cost. And at this time, this was early 2010s. So on the retail side, customers were still paying upwards of $10 for every transaction for a retail trade. And meanwhile, we saw our customers were trading billions of dollars per day in notional and paying very, very low fees. So there was that observation that there didn't seem to at least be a technological barrier to lowering the cost tremendously. And then I was actually moving out to California 2011 to create an engineering office for our enterprise software business that was selling trading software, which was called Kronos Research. So I went to California to build the West Coast software office. And it was right around the time that Instagram was becoming really big. They were down in Palo Alto. Uber had recently launched Black Car in San Francisco. And I think I was there at a very opportune time to see actually the first wave of mobile first experiences. And what I mean by that is not just, existing apps being downscaled to fit on your phone, but really experiences that were redefining a category, that were using the unique benefits of a mobile device that you just couldn't replicate on desktop. Like Uber, for example, you couldn't have the Uber experience on desktop because you had to have the location of your phone. So actually getting a car called to you to your location while you were on the go is something that was not possible before. Instagram as well, like without the actual camera being on the device, you couldn't have that seamless experience of, taking a picture and immediately posting it on your feed. And I think that inspired us quite a bit as well. We asked ourselves, well, nobody's really built mobile first trading. And we kind of put these two ideas together. Can we redefine the experience, particularly on mobile, and build mobile first and lower the cost using all of this technology? So I think we were just in the right place at the right time. We were able to straddle both of these worlds, and that led to the idea.
But the issue is the finance industry is tough, right? Especially at the retail end because of the licenses and the incumbents. And there was some very ingrained incumbents from Schwab, TD Ameritrade, all of those guys. It's pretty hard to think how you're going to get market share from them, and you end up beating them all.
Well, I think the truth is everything is hard. Yeah. I think it just becomes hard at a different point, right? And, I see a lot of entrepreneurs that want to avoid, regulatory scrutiny. They don't want to deal with that. They build in unregulated spaces. But I guess the downside there is because of that regulatory scrutiny, if you actually get past that hurdle, which is hard, fewer people want to do that. Whereas, if you want to build a business that's unregulated, barrier to entry is a little bit lower. You're going to have more competition. So there's no free lunch. And what I found is it's always hard,
It doesn't get easier either.
Everything is hard. And, success, the parameters that sort of like drive your success change, but I haven't found anyone that's just like breezed through it and built a
because all the business books say, oh, we started it in our garage and then we became billionaires. I'm like, no, there's a lot of ... in the middle, which is all pain.
Yeah, exactly. Yeah, and if you're not dealing with the pain and moving through it, I think success is elusive.
Hi, Raoul here. Listen, I think we've got until 2030 before the economic singularity arrives. Now, it might not be the exact date, but it's around then. So we have about 6 years to figure out how to unfuck our future. I've put together a report to help you called Prepare for 2030. It's going to help you take the first steps in that journey to make sure you're secure past 2030. So just click on the link below and start your journey now.
So when you started, what were the assumptions that you made that you were wildly wrong on, and what did you get right?
I think that we probably at the very beginning, underestimated how much trading volume would go through our business. So, I mean, we had relatively low expectations and assumptions across the board for how much revenue we would generate, how many customers we would have, and also probably the conversion rates from waitlist to funded account. And part of the reason is, I think when you're out there building a business model and you're actually pitching investors, they kind of second guess and question all of the assumptions. So what you end up having to do is come up with realistic assumptions for everything, right? Yeah, there could be a bull case, but more realistically, it's this. You get those realistic assumptions by looking at what the competitors in the industry are getting and kind of putting them in your model. And some feedback that we got actually when we were raising our seed round was that, geez, this business is very small. You're not getting to a very high revenue scale after 3 years. So our business was particularly difficult to sort of like rationalize in the early days, because if you don't assume that you're going to grow very, very fast, the business itself isn't that big, and nobody would give you credit for growing very fast before you've shipped anything. So that was the challenge that we had to navigate.
How the hell did you get investors then? If you've like, well, here's a business model, it looks pretty shit, but I think it might be a good idea. How do you get investors on that story?
Yeah, and I took there were lots of investors that emailed me the nice breakup letters, and they were like, "Well, we really like you guys. We're wrestling with this, but the revenue scale is just too small in your model." And I had to reply, "You're right, but we could end up doing better than this conservative model." But of course, no one believed that. Yeah, to get investors, we had to knock on a lot of doors. Yeah, actually, in the seed round, we were live on AngelList. So, normal everyday investors from the Midwest could invest in Robinhood back in 2013 at a 10 million valuation cap. And we took all comers. We pitched these Midwestern mom and pop investors in the same way that we would pitch a Google Ventures or an Andreessen Horowitz. And we fully funded everyone's demand. If someone said, they wanted to invest, we gave them their full allocation as fast as possible immediately. And we were able to scrounge together $3 million to finish our seed round that way. But we had to knock on a lot of doors. It was basically my full-time job for 3 to 6 months, and distracted me quite a bit from writing code for the launch, which was probably even more important. But such was
capital raising was not easy. But you must have made some of those people quite happy.
Yeah, and we still hear from early angel investors that participated in that round from AngelList. That and in some cases, investing in the company changed their lives. So I'm proud of that. That's good.
Just cool.
And maybe it's a tool. Raising capital is a tool to build a great business, but it's also, we're in the business of investing. So hearing from investors that do well and whose lives have changed is very, very nice, always. So I do enjoy that.
So we'll come on to your roadmap and what you're building, but one of the things that has changed over the period from when you started was the rise of crypto, which appears to be the fastest growing market we've ever seen in finance in the shortest period of time. What was your journey in that? When did you start paying attention to it?
We started paying attention to it pretty early on. There was discussion even before we started Robinhood about whether we should be doing something in crypto. And back then it wasn't crypto, it was just Bitcoin.
Yeah.
So, should we get into this space first before getting into stocks? That was something we actually had serious discussions about, building a Bitcoin exchange. And because you saw some similarities from a trading perspective. The early Bitcoin exchanges were all using the same protocols as the traditional asset exchanges. So you could tell they were, the builders of those exchanges were thinking about it with a institutional, professional lens. But yeah, it was very different back then. I mean, Apple wouldn't let you have a Bitcoin app on the App Store in the early days. So, I mean, imagine you think about the regulatory scrutiny and how unfriendly it has been in 2020 or 2021. Back in 2012, you couldn't even get on the App Store as a crypto app. So, the concern was this market is very, very small at this point, and also at every level, people are just like skeptical and fighting against it. But the degree to which, now you look at crypto, Bitcoin is basically accepted in its full form by pretty much everyone in the US. And the discussions are, how far can we take the technology to apply it to all sorts of things? And, we do discuss how nice it would be to have sort of like full and unfettered access to be able to do interesting things with this technology. And we're pushing that forward. But even just Bitcoin has come a long way in terms of acceptance.
How fast did it grow once you kind of opened the pipes on Robinhood versus how fast the traditional business grew?
Yeah, it was very, very slow at the start. So we launched crypto on Robinhood early 2018, and it was, a gradual phased rollout where some states we could go live in right away. Other states, we actually recently got, for example, Hawaii was a laggard, some other states as well, but it was slow. I mean,
it was a bear market as well, wasn't it?
Yeah, so we went live. We had our first customers, I think, end of January 2018, which was right after the kind of secular peak in December 2017. And then you just saw a relentless just decrease in volumes month over month, industry wide, not just not on Robinhood, obviously, but industry wide, with some blips along the way. But yeah, it was doing nothing for us for 2.5 years. And then suddenly Q4 of 2020, you probably remember it well. Q4 of 2020, we just turned around and, we looked at how big of a contributor crypto was to our business. And it went from 0 to a 9-figure run rate practically overnight.
Incredible.
And, monetization was quite low on crypto. I think we were making something like 10 basis points on crypto trading, which was very, very competitive. And 2021, the first 2 quarters were just insane. I mean, I've never seen any business grow at that rate. I'd have to compare it to sort of these AI businesses today, but crypto revenue in those 3 quarters went from close to 0 to hundreds of millions. So yeah, that was tremendous.
Yeah, and then it's so cyclical that it falls off a cliff and then it comes roaring back again. And it's not easy to deal with as a business.
Yeah, and I would say we've been through. We launched sort of after the 2017 bull run when we were coming down. We got to experience 2020 and 2021, and now we're in some state. And you compare the logarithmic charts of Bitcoin and the industry, and it follows the halvening cycle. So you could probably say we're in the midst of the second such cycle we've been through. And what we know is after the first, the business hit a new baseline, right? It was never as small as it was in the first 2 years. It hit a new baseline, and it's followed sort of like this very particular progression of volumes that I think mirror the overall price action industry wide. So we were late, but we've been catching up to market share and really growing the business.
Yeah, I mean, you guys have been executing so fast. We'll come on to the roadmap in a sec, but how do you deal with staffing and headcount with a market that's so cyclical? Because, you desperately need to build as fast as you can, which is what you're doing right now. And then before you know it, the revenues fall off a cliff, and it's just hard to manage, right, as a business.
Well, I think we had the opposite problem, really, because when we launched, it was very, very small business.
True.
Well, I was talking to Johan, our crypto GM, today because we have a hood hero segment at Company All Hands. So we like anoint hood heroes, which are by popular people vote for them within the company. And yeah, we had a hood hero, which was an OG member of the crypto team, so predated Johan, and was there in 2021 when the volumes went from basically nothing to, a business making 9 figures in revenue. And we had 3 engineers on the team at the time. So, and he was one of the 3. And we had this slogan. It was funny when we launched crypto. We gave it this vaporwave 1980s aesthetic. So like, Michelangelo David statues and like pink and purple hues. I think this has actually taken off within the crypto community to some degree, probably in part of us going with it. But the slogan was "Don't sleep," right? And we had these "Don't sleep" posters. And it was because crypto doesn't sleep. It's a 24/7 asset class. The financial industry shouldn't sleep on it as an asset class. And obviously the engineers aren't sleeping because they're up 24/7 building it. And at that time, certainly keeping it up and making sure that we would provide our customers good service. But yeah, so because it was birthed in the deepest of the winters, when it got to 2021, we were just like scrambling to staff up and to actually not just add features and grow it and keep up with the demand that way, but also just serve our customers and maintain the scale. And so I think it was actually good in hindsight that we kind of like went along with it with very low headcount, because the team has had this very lean and scrappy mindset from the very beginning. And so we've fortunately never been in a position where we've had to, think about downsizing the crypto business significantly itself, because it was just like very lean to begin with.
Now, you guys have been executing at a ridiculously lightning rate right now. I don't know how you're executing so fast, but what's your roadmap like for the next 12 months? What are you looking to do?
Well, on the crypto side, we have an event. Our first crypto event's going to be in the south of France in a couple months, so end of June. And we've been doing these events for our other business areas. So for active traders, we did Hood Summit in Miami, and that was last fall. There we announced Robinhood Legend, which is our desktop prosumer trader offering. That's done very, very well. We've had 2 gold events. So actually our inaugural product event was the gold event last year, where we launched the credit card. This year, we launched banking, Robinhood Cortex, which is our AI offering, and also Robinhood Strategies, our digital investment advisor. So this is going to be our first crypto event. It's going to be in Europe, and obviously we'll announce and launch some good things for customers both in the US and Europe. So there's a lot of excitement there. The things that I'm most interested in the future are the areas where crypto and traditional finance sort of intersect and merge. And I think that area has been mostly confined to on-ramps and off-ramps recently. It's mostly been about, how can you get your US dollars or local fiat currency into crypto or convert the other way as seamlessly as possible. We've got some good products that we've rolled out there, but I think increasingly it's going to be about, how can we get the blockchain to power investing in all kinds of assets, from tokenization of private companies, public companies, to, different collectibles and other assets. So we've been thinking a little bit about that and how that would work, and also what the best way is to bring it to market to consumers and to developers.
Yeah, I think there's a lot that's going to happen at that nexus between the two of these things. I mean, eventually equities need to go on chain because it's just faster and cheaper. And then they become more fungible so people can trade between them. And I think it was very interesting. Obviously, you've seen the Deribit acquisition by Coinbase, which is the option market, where you guys have really pioneered options as a retail product. Be interesting to see what they do with it. How are you thinking through options yourselves in crypto?
Yeah. Well, we have in the US, at least, where we have a scaled options offering, access to options on all sorts of products, right? US equity options. Now we have index options, which have been a compelling product. You have the Bitcoin ETFs that have come out. So the options market, has just been incredibly strong. In terms of demand for crypto options from our customers, we haven't seen a huge amount where they want, I want an actual spot crypto, or I want a spot crypto options product. And I think part of the reason is we already have enough flexibility there. So I think that if people want to deploy a leveraged strategy with options, you not only have, the crypto ETFs, but you have tons of other assets that have various degrees of correlation with crypto and other things that you have access to. So I don't know if it would be a big thing. It's certainly not something we hear about. I think in the
I think also people haven't really had access to it because the options were on the futures. They've now started on the ETFs, as you say, but it's early days. And I think the main users seem to be the professional traders still. But, it's interesting to me. But there again, do you need it? I mean, crypto is volatile enough that maybe you don't need the options.
I think in the fullness of time, we'll have every asset, even some assets that are quite similar to other assets. But I think for us, it just hasn't been. I mean, there's other things that have been higher priority.
One thing that I think you and I have talked about this as well in the past is the rise of the speculative economy. It's I've got my thesis is that because of the debasement of currency over time, assets have got more expensive, houses, stocks, stuff like that, and therefore the average millennial can't really afford a house. They're now having kids. They've got to put kids through school. They just can't get ahead. And we're seeing a commensurate rise in speculation or what's perceived to be more risk-taking behavior or risk-seeking behavior from them because it's the only way. I mean, they still do their 401k investment, but they seem to use excess cash to try and get ahead. And that's driving, what you guys have seen in options. It's driving crypto. And when I speak to young people about it, it's like, oh, yeah, we don't have a choice. Do you think this is a persistent trend? And this is, you guys have started building in prediction markets as well. It feels like it's all part of the same thing.
Yeah, I think the common theme there is just that investing itself and trading has become more accessible to people with smaller levels of assets. I mean, when I first started trading stocks, it was the dot-com boom. I think 1998, 1999, I was about to be a teenager. And of course, I spent a lot of time at home with a computer. So I had my Yahoo Finance fake money portfolio and I was doing quite well. And so my dad, who was not, we were not wealthy at the time, but I think he wanted to encourage my interest. He's like, hey, this is amazing. You're doing really well with this fake portfolio. So he incentivized me to open up an E-Trade account and actually sort of like gave me a little bit to invest in. And back then it was $10 a trade. So, with a $100 E-Trade account, you were basically out of luck. You couldn't make that many trades. You had to really be confident in that one stock to hold it for a long time. So it was very hard to be a trader with a small bankroll, right? And you get this sort of pejorative comment from people who are typically wealthy who say, well, that's not what these Robinhood traders are doing is not good. That's not how you should be trading. You should be, buying and holding.
You should be Warren Buffett.
Yeah, but the problem is, that's really a strategy for people that have a lot of money. If you have a large amount of money, let's say you have $5-10 million or more, and you can make a 5% return on that, that's a significant, that's like money you can live off of, right? You're imagining, you can make 250,000 a year if you have 5 million and you're generating a 5% return. So you don't need to take that much risk. But if you have a smaller portfolio, if you're starting with, $10,000, 5 to 10% return, 5% return is, not what these people are looking for. So they can't use the same strategy. And so I think inherently the difference between investing and trading, if you're wealthy, they call it investing. If you don't have as much money, it's trading. But what happens is there's people that are very, very good at trading. I mean, we've seen them born and kind of continue to excel on Robinhood. And, these people are analyzing the crap out of everything. They're getting all of the data. They're staying on top of trends, and they move with conviction, right? And, it's sort of like if you've got a big bankroll, you can succeed and you can generate income from your investment portfolio without spending a lot of time. But if you want to be a trader and you're going for those greater returns, you have to do a lot more. You have to work a lot harder to capture those ideas and to identify those trends. And I think that's become easier with our platform because it's possible now to start with small amounts of money. And I fundamentally believe trading is a skill, just like playing a musical instrument, or playing a sport. You can get better by practice and by being in market more. And, it's fundamentally, you're fundamentally limited by how much you can actually read passively in a book. It's like, imagine getting better at basketball by reading a book, it's not going to happen.
And I think you fundamentally changed access to markets with what you did. And, that you got to take enormous credit for because they had no option apart from a 401k. E-Trade didn't want them. Nobody wanted them. And then you gave them access in a way that they understood and created a UX that was engaging for them. And what we've done is onboard. You've literally onboarded millions of millennials. Up until 2020, they weren't really active. And then suddenly, all at once given a check, they decided to become active. And it was an extraordinary thing. I'd kind of given up thinking they're never going to come into markets. And then suddenly they did.
Well, yeah. I mean, 2019, I would say if I look pre-COVID at Robinhood, we had still built a sizable business much faster than anyone had predicted. Because we delivered great products. We forced the industry really to go to zero commissions. So the industry adopted our model and kind of took cues from us about how this new wave of mobile first trading should look like, what the product should look like. And we, I think, crossed something like 10 million approved accounts in 2019. But, at the end of the day, our traders are smart, right? And they very clearly saw in 2020, right after the smoke cleared from the initial pandemic sort of like market turbulence, that the Fed and the government was very much doing everything they could to support the markets, right? And that became very, very clear with the stimulus and the different activities. And you could see on all of the threads, people were dissecting every move of the economy, and I think that increased the activity tremendously. I mean, you saw a lot of activity, but I don't think it was merely the fact that there was money helicoptered. That was a component of it, but people just became a lot smarter and they were paying attention to everything. Everyone became a full-time trader during that time period because that was one of the only ways you could earn supplemental income for quite a while.
Yeah, and I think it's changed a lot of lives. How do you think about the success rate of the people coming onto the platform? Because a friend of mine ran a large business in the UK, IG Index, and that was one of the problems they always had was how do you get the success rate higher? How do you make sure that your community of members ends up making money?
Yeah. Yeah, I think it's a great problem. We're trying to tackle it as best as we can. I think that in the US, the difficulty that we have to contend with is because we're a broker and up until recently haven't been a registered investment advisor, you're extremely limited into what you can actually do in terms of sort of like nudging customers toward particular products or recommending products to customers. So we had to be careful just to present the products as objectively as possible and not, put our finger on the scale one way or another. But recently that changed. We rolled out a product called Robinhood Strategies, which is an RIA product. So we're a registered investment advisor. We actually have a fiduciary responsibility to customers. It's limited, obviously, to U.S. equities and ETFs for now, but we're seeing success. So obviously, there's customers that want more guidance and want advice, and we plan to serve them across multiple vectors. Of course, strategies, which is a digital offering, being one. But also, we acquired a company called Trade PMR, which will actually give you a human advisor should you want one. So, you'll get a human advisor that we're working on a great experience for how to integrate them into the consumer product. And we'll have offerings across the whole spectrum, from if you want to make a crypto stock or derivatives investment yourself, all the way through to an extremely high-touch relationship for high-net worth individuals.
One of the things that I've been particularly focused on, and I think you probably saw it back in 21 with the whole GameStop thing, was the power of community. And the power of a hive mind. I don't know if you've read the book Superforecasters. It's a really interesting book because basically what they do is take a bunch of it's a statisticians who get a bunch of people who are all reasonably educated, but not experts. They then incentivize them to become experts and set them a problem. And what happens is they become better than the experts as this community of people. And they consistently outperform every expert in the space. And it's the idea that the community, the power of the hive mind, is something I think more powerful than people realize because we all learn from each other.
Yeah.
And that community thing, I think, is the moat to all businesses in the end. Because as AI comes, the speed of disruption is so fast in how fast people can build businesses and what happens that really being around humans is maybe the only moat that we've got.
Yeah, I think that's an interesting thought. I'm not sure, in short. Yeah, I'm not sure if I agree. And in two ways. One, I still think in the age of AI, it's going to be as difficult as it was before to make products and have those products compete for attention, which is ultimately still a fungible resource, unless we somehow find a way to monetize AIs being consumers and customers of our products, which might happen, but at least isn't happening in the near term, right? The other side is, I don't know if community can also be disrupted by AI. Like, maybe people will increasingly turn to AIs to provide what they're getting from human communities, and you'll see it happening in the other way as well. Yeah, I think about it just as any sort of technological transformation. When you have when we moved from pre-internet to internet, there was obviously a gigantic change and new opportunities came up. Same when we went to mobile. And also cloud opened up a lot of things on the enterprise side. Crypto is doing that. And the amount of things and the actual possibilities for how you can succeed as an entrepreneur, but also as an investor, have just multiplied and gotten complex. But yeah, I don't know if the opportunities are dwindling in any way. That's the fear. It's like, what do we do if everything's automated by AI? But I just haven't seen it. And in fact,
Yeah, and look, I mean, eventually AI just gets better and better than us at stuff, right? Whether it's running a business or coding or trading, whatever it is, right? AI will get there in some way, shape, or form. And I think a lot about what is the purpose of humans in the workforce, when there's no jobs, and gets talked about a lot. And my particular opinion is that humans do one thing better than AI will ever do, and that's being human. And so, what are humans? We're social creatures. Yes, can we socialize with AI? For sure. You're seeing that with stuff like character AI and stuff like that, where kids are adopting these things really fast as friends. But as humans, we kind of like being around other humans, and we like being part of big communities like sports, music, all sorts of things. Religion is another one. It's like a community-centric thing that gives us a sense of purpose. And I think tokenization is one of the ways that we can monetize that attention within a community that gives us still a purpose that doesn't involve doing a 9-to-5 job. It's just a different purpose.
Yeah, that's interesting. Yeah, and you've seen it too in non-crypto context where YouTubers have, like Mr. Beast, what's he up to? Half a billion plus followers, subscribers. So if crypto can make that a little bit simpler and allow the creators to capture the lion's share of the value from those relationships, I think that's a big opportunity.
Yeah, it's interesting actually, because I was speaking to friends of mine who have young kids, and they ask their kids, what do you want to do when you grow up? And if you'd asked you or me, we would have had different answers, but their answer is, I want to be a YouTuber.
Yeah.
And at first their parents roll their eyes and think this is ridiculous. And then when you ask them to think about it, you say, actually, this is a pretty good way of future-proofing yourself. Although we'll still have AI versions of that.
Yeah, absolutely. Yeah. And then my answer would be, well, yeah, you don't want to depend on someone else's platform. Much better to be YouTube than a YouTuber, right?
That's very true. So when you look out in 3 to 5 years, what do you think about for the business or just for the world in general? Not just necessarily about Robinhood, but just in the world in general, because we're going through, I mean, we thought crypto was fast adoption, but I think AI has dwarfed that again. It's like kind of Metcalfe's law squared right now. It's so fast. Where do you think we're going?
Yeah. I think about both of those things. I think those are obviously the two big technological shifts that have the potential to disrupt not just the financial industry, but everything, right? Everything, every industry.
It's a humanity scale disruption happening.
Yeah, and I think financial services is kind of at the center of both. Probably more so crypto, more directly, but financial services is relevant in AI in a number of ways. I mean, one of them being, how does financial services itself actually transform with AI, which is kind of the direct, like every industry, it's going to adopt and transform, and we're very much thinking about that and making investments. But the other is markets in particular, and the role of being an investor. How does that change if some of the other assumptions that we make about AI actually end up coming true? So, for example, if you get something like what some people are afraid of large scale disruption of the workforce and employment that's AI driven, what does that mean for investing? And I think a good example for what it could mean is the pandemic in 2020. The pandemic actually gives you a nice little substrate to evaluate this, because what were the government's attempts at with dealing with the problem? It was basically UBI equivalent, helicopter money sent directly to people to make up for what was in that case a much more rapid dislocation in the labor market, but the government had to step in and kind of help folks close the gap. And what did they end up doing? I mean, they ended up trading and investing in ways that there's been no precedent for. So I actually think the financial industry will become disrupted and transformed itself. But at the end of the day, the need to be cognizant and be an individual investor and trader will only increase rather than decrease.
It also becomes a form of entertainment. As you said before, over the pandemic, it became something that people learned and they enjoyed doing, and it felt good, right? That was what onboarded so many people. One of the things I think about a lot is something I call the economic singularity, which I'm kind of pin at about 2030, when GDP growth is a function of population growth plus productivity growth and debt growth. And we've got aging populations everywhere. So that GDP growth slows down over time. But we're about to introduce infinite humans, which is AI plus robots. Infinite humans. Okay, so that's one thing. So we're going to get GDP growth that looks wild, but who does it accrue to? Okay, that's something we can't really get our heads around. The other thing is the speed of disruption to businesses is like, soon an AI can build somebody's website it can do it now. In about 10 seconds, you can build a website, or give it 2 minutes. So it can build basic businesses very quickly. We've got the rise of the agents coming. So it becomes more complex. But there was a friend of mine, an NFT artist, Beeple, who asked me a great question over a drink. He just said, he's like, well, when ASI comes, or even AGI comes, surely it just wins markets. And the first person to point it at markets makes all the money. And I was kind of joking about it, and I went back and thought about it seriously. I'm like, you know what? Markets will not behave in the same way because most markets will be run by computers. Now, we've had markets running as computers in short term, high frequency trading, market makers, all of that stuff. But now we've got probabilistic longer term investment models that will do this. I don't even know what markets are going to be, which is why it comes back to your idea of humans still want to speculate. They still want to get ahead. And I think that prediction market idea is another interesting thing. But I don't know. I just start to get past 2030 and hit an economic singularity where I can't see through the other side. My job as a macro guy has always been to kind of look 10 years ahead, and I can't see it.
Yeah, 10 years ahead is tough. I think we have wide error bars on what happens on those scales, but I think we can predict a few things, right? I think one claim that I would make is it becomes a little even more important than it is today to manage your own finances, to be familiar with investing and trading, because perhaps I would want to own stock in this trading ASI that you're stipulating. I mean, if we could make a mechanism to make that available to more people, that would be a great way for, people would be interested in that. And again, my guess is if one exists, there will be multiple, right? People will make their own, they'll compete with each other.
Does that then change markets so they just represent GDP growth or something? I mean, that's what I'm trying to think, because you take out the human emotion, the fear and greed that makes markets.
I mean, I was in the high frequency trading space, and something like 90+% of trades on the exchanges are algorithmic in nature anyway. Like, there's very few true retail trades as a percentage of everything.
That's right.
A lot of the activity is algorithmic high frequency trading.
Yeah, last time I saw it, it was at least 75% of all volume.
Well, and if you think about it, those are AI trades. I mean, that's probably the first place you saw true AI, in the sense of you have to, the firms that are doing an excellent job of this are firms that take in all of the information. They take not only just the market signals from the order book, but they get all the economic indicators. So, it becomes an arms race to how you can be the quickest to get oil numbers, commerce numbers, the jobs and unemployment numbers from Washington, D.C. So I would say that they had AI 10 years ago, if not more, and they're in a hyper competitive race to actually, do this. So I'm not sure you're going to see much transfer in financial markets as a result of AI beyond what we've seen.
So I would argue that what we were able to do was use short-term predictions. Machines were very good at reacting fast. So taking a piece of information, making a probabilistic outcome, making either fading a bid or taking an offer or whatever it was doing, right? Whether it was market making or just high-frequency trading. But anything longer term required probabilistic thinking, of which it was not clear that was going to happen until full AI come. And now, even if you ask ChatGPT for probabilistic framing for, let's say, macro-based investing, which is complex because it's multi-asset plus economic data and everything else, it now can do it decently well. And that's a big change because suddenly time horizon changes.
Yeah. Well, and you also have, because it's a long-term 10-year view that you're asking it for, it also makes it difficult to evaluate how good it is, right? I mean, it could be good, it could be not. It's inherently, it's chaos. It's a chaotic system, so it's highly sensitive to conditions at the initial set. So I think that's why it's tended to be used for short-term trading to begin with, because you constrain the parameters. You also get a really quick feedback loop. If trades last on the order of microseconds or hundreds of microseconds, certainly intraday, you have a feedback loop. But yeah, I mean, high frequency trading, I think, as a discipline, was there at the beginning of both AI infrastructure and also was probably among the first to use some of these techniques, because it's a very constrained, very simple environment where you get immediate feedback on your predictions for the future. In fact, some of the early, a precursor to the H100s and H200s, or the Nvidia Tesla chips. I don't know if you remember the Nvidia Tesla chips, but it was really part of a push. It was Nvidia's first push in the latter part of the 2000s to get into high performance computing. They started off as a gaming company, which is another crazy thing, right? How somehow like they were making graphics cards for PC games in the 90s, and then this became like the what powered the AI revolution, which sometimes I think about. It's you can look at some of these things that look like toys and not take them seriously. But if it weren't for teenagers playing computer games and, playing Counter-Strike and Quake in their parents' basements in the 90s, we might not have had the AI investment in the past 10 years, right? But some of the first customers for high-performance computing chips by Nvidia were the high-frequency traders, because they were the ones that first saw the power and utility of GPUs to do like complex options pricing and other things. So, when Beju and I got started in New York, we were playing around with those chips, and that was when CUDA first came out, and now CUDA is used to train all of these AI models. So,
did we ever figure out what edge Renaissance Capital had and how far they were in AI? Because we never really got to find out what the hell they were doing.
I never figured it out. Yeah. I mean, if you find out, I'd love to hear about it.
I know, because their returns were insane, and they'd obviously built a lot of AI. They were precursor because, money attracts opportunity. And if you're in finance, you tend to get the technology very early. So
yeah, back when I was in the space, before I got into, building enterprise software, or before Robinhood, it was all about the high frequency traders were all trying to figure out how to go from fiber optic cable in the ground to microwave, right? Because the trick was all about how to arb the different exchanges where you're trading.
The book Flash Boys was about this as well, and how close you were to the exchange and how fast you can pipe the data.
Yeah, that book I think covered events that took place at around that time. So, there was I think one of the founders of Netscape had built in secret a very straight fiber optic line between Chicago and New York, where you could arb the futures and options markets against equities. And, it was basically sold out immediately. But of course, then someone figured out that, if you go point to point through air via microwave, it's theoretically much more optimal than even a straight fiber optic line. So that was the criticism of it. It was a technological arms race to the greatest degree, which to some degree is happening with GPUs and AI models right now. But sometimes these technological arm races push society forward in unexpected ways.
Do you think AI goes to zero in cost? Just because of the nature of anything digitized basically goes to zero in cost. You've taken trading fees down because of the high frequency traders, who take order flow. There's a whole number of reasons, but it just feels like AI is a race to zero in cost, which is an extraordinary thought.
I mean, the cost.
Well, obviously, power and compute in some way, shape, or form.
Yeah, the cost of compute is certainly going to zero, and there's a ton of investment towards more and more efficient compute. I think also the amount of intelligence, and I don't know if there's a good metric. People are still looking for the best metrics, but the sort of like intelligence per unit of compute is also increasing.
Yeah, exponentially.
Now, the question, the important question to ask is, what does that mean for like aggregate AI spend? And I forget the rule. Maybe you remember it, but there's a rule that says, well, when you lower the cost of something, the usage of it tends to explode. So I actually wouldn't be surprised, at least for the foreseeable future, for the total amount of compute to continue to increase while the costs of the compute and the efficiency.
There's something law, I can't remember what it's called, but it was exactly this. Because remember when DeepSeek came out, the Chinese model, the markets freaked out.
Yeah.
Like, it's they've undercut them in price, and then people realize very quickly, well, the cheaper it gets, the more this is going to explode.
Yeah, exactly. Yeah.
How do you think your business is going to be using AI when we're out into the 3-year time horizon? It's too hard to think beyond that. I think it feels like the entire UX layer collapses into AI.
I don't think so.
No?
Yeah, I don't think the UX layer collapses into AI, just because what we've noticed is, people want to use interfaces that are specific for the particular use case that they have in mind. So I don't think it collapses into
Robinhood
AI.
AI would replace most of the UX layer that you have on the platform currently, as opposed to a generalist AI.
Yeah, if by that, so I don't think there's just going to be a chat box that you have to type in, I want to buy this stock, or I want to, trade this prediction market, or buy this option. AI will probably streamline a lot of the software that creates custom interfaces for you. And I think in this particular space, if I have to look at products and who I think of the AI native companies are doing a good job, I think Perplexity is doing a nice job. They're really trying to go beyond the chat box into building kind of like bespoke experiences for sports, for finance, for other events. They'll give you a nice bracket if you look up information about the NBA playoffs, for instance. They'll do like a nice earnings transcription service. So that's kind of an example of flexible interfaces that are powered under the hood by AI, but understanding that, it shouldn't just push people into a standard chat box, but if you can kind of leverage that to make it easier to design bespoke experiences with like finely tailored UX, I think that would be really cool. So at Robinhood, we've got the engineering side, which was an early adopter of all of these models. We made it easy for employees and our engineers to take advantage of them, to use whatever model they wanted to use, to write code with the models. And then you saw it in a customer-facing way through customer support, where we very early started making investments. And now with Robinhood Cortex, you're seeing it front and center in the product in ways that solve very, very specific problems for users, which are stock digests and building options trades. And I think from there, we're going to take it even further. So we're looking for the biggest pain points where we think AI can make a considerable impact to the experience of a trader or anyone engaging with other financial products. And you're going to see that. You're going to see Cortex kind of expanding throughout the product suite across the board.
The other thing I think about when I think of 3 to 5 years' time, call it 5 years' time, is that there's a trend that of bundling and unbundling and decentralization, right? So decentralization in crypto will sit in AI, all sorts of stuff. I also think it's going to happen in asset management. And I think it's a monster because of tokenization. Yeah, we talked about the power of community, the power of a hive mind, the idea of superforecasters. And what it gets me to is that we're going to create crowdsourced tokenized asset management. So therefore, people can essentially be hedge funds or asset management firms or ETFs because you can tokenize it and spin it up. It feels that that is another big disruption to come because, you know, if you look at it as a disruptor, it's a multi-trillion-dollar industry full of incumbents that can't change. And yet the technology has changed everything. And the behavior patterns of young people have changed.
Yeah, I think there's some interesting glimmers of what people are trying to do there. I mean, you have copy trading, which I think is kind of in
that direction. Yeah,
it's a step in that direction. You know, it's a little bit in weird footing from a regulatory standpoint in U.S. equities, but for crypto, you're seeing more and more of that. I think we were talking earlier about you were sharing some of the things that you've been playing around with. But yeah, copy trading is interesting, and that's just basically what you think about that as a way to integrate the UX and bring community and trading in one place. So
exactly.
There's the benefit there. Tokenization, I think, is interesting because you get a couple of things. 24/7 and fractionalization are nice, but I think one thing that isn't often talked about is the portability of assets. So right now, if you're using, you know, a traditional financial account like Robinhood brokerage account, your assets are in your brokerage, and it's actually very hard for them to leave. I mean, we come across this with, it's called the traditional ACATS process. You basically, I think at most places it still has humans in the loop, and it's, you know, a highly laborious, intensive process that takes multiple days. So, you know, if your broker has an issue, your assets are kind of locked there. But, you know, one of the benefits of tokenizing and putting assets on a blockchain is that blockchain would have to be down for you to lose control of your assets. So it'll make portability much easier. You know, if there's an issue at the application layer with one broker, a user could just use another broker and access their assets. So as long as the blockchain is bulletproof and robust, it becomes much less risky for consumers, and you get much less lock-in, and you can just switch between services and asset managers depending on who's providing the best value to the end user.
The other thing that is clear to me is capital formation is going to change. You know, if you think about, we can all be cynical about it, but what happened with that Trump token was fascinating. I think it was the fastest, largest capital formation in history. Multiple $1 billion happened in a couple of hours. Now, it was, you know, it's not exactly the right form, but, you know, the financial markets and particularly crypto are very quick to use it in weird use cases, memes, stuff like that. But memes of capital formation based around attention. Okay, fine. But it feels like, you know, we had the ICO economy back in 2017. We tested the idea. We kind of screwed it up. But it feels like this is a big thing that's coming. And you talked about this as well, kind of, you know, private capital raising. You raised via AngelList. I mean, I don't see why that should not be crypto.
I completely agree with you. I think that's a huge opportunity. And, you know, we were talking a lot about trading and investing earlier. I think being an entrepreneur, and entrepreneurship is sort of like another aspect of that. I mean, in the future, I think more people are going to be entrepreneurs. It's going to be easier to become an entrepreneur. And a big part of success or failure is having access to capital and getting it quickly to the point where it's not very distracting to you. I mean, if you
we
think
talked
about it,
you raising capital in the beginning, and you weren't able to do product development because you're out raising capital. It's a huge distraction. It's incredibly stressful.
huge distraction. It takes up at least half of your time when you're a small team, and you have to do two very difficult things: make the product work and satisfy an initial customer base with a good product, but also you're spending half of your time raising money at the point where the risk and uncertainty is highest. So I think that if we unlock easier capital formation through crypto, we'll get more startups and more innovation. And I think that's an amazing thing. And, the Trump token is an example. I'd say two things about that. One, it does show the power of the technology where, you can get billions of dollars of capital formation by tapping into a global crypto market, and, creating one of these tokens. I mean, you get hundreds of thousands to millions of new tokens created every week because the friction of creating it is so low. But also, I'd say part of the reason why crypto has this reputation, somewhat, at least in the US, of being disconnected from reality is because currently it's illegal to connect it to reality. Because if you connect it to reality, it becomes a security. And if it's a security, you need regulatory clarity, which we don't have. And so that's why, if you have a dam, and the dam and the sort of like huge demand is for people getting access to differentiated assets to invest in that give them the potential of high returns, right? And you close off one big chunk of it, which oddly I think is the chunk that people would want to see more of, then it'll find another way to get through. And I think that's happened through the meme economy. So I think if we had comprehensive crypto security legislation, and we were allowed to connect cryptocurrency technology to real world productive assets, certainly a higher percentage of crypto activity would be in real world productive assets. You'd see it applied to securities quite effectively. And so it would solve that problem. You might also get more meme activity kind of in aggregate, but certainly the percentage would shift. And I think the perception of crypto as a technology would improve. So that's one of our biggest policy priorities in Washington.
Yeah, I mean, when I extrapolate trend rate of growth out of crypto, I get to something like $100 trillion within 10 years, which is not, would be in line with other asset classes. Even if I'm wrong by 50%, if it is 100 trillion, we're only 3% of the journey. But even if I'm wrong, it's still going to be the largest, fastest wealth generation event in all history. I think people aren't understanding how much capital is going to get formed in this and the uses of that capital, and how it completely changes the game, as you talked about, of access to capital.
Yeah. Well, my prediction, this might be a little bit of a hot take because it's aggressive, but I think that technically what you're saying could happen, but I don't think it's going to be native crypto assets like we have them today. I think at some point we're going to flip a switch, and the securities markets will all be powered by crypto technology.
For sure.
It'll be almost like how technology as a sector has become
the
largest sector.
But because of the behavioral incentives of the protocol and how they use tokens, it's going to accrue to those tokens. So it's like, using AWS accrues to Amazon, but using Ethereum accrues to Ethereum token holders. So that's where the wealth generation comes. You can build the whole financial system on it, and we will for sure. That was I wrote the first ever strategy piece on crypto back in 2013. And this was my base case, is the entire financial system has to go on it. And I think that's true. But that increase in token value, it's a big deal.
Yeah. And you're saying that that'll increase, that'll accrue to the platform layer, the blockchain layer itself.
Yeah, I mean, it'll accrue to various layers because you have the applications layer and the infrastructure layer, essentially. I mean, it's just technology. The other thing that was interesting is talking about bringing it back to the loop of AI, was seeing the fact that, I don't know if you saw this, the AI that ends up raising money from Mark Andreessen and then ends up launching a token and self-funded.
Are you talking
Terminal
about
of Truths?
Which one is it?
Terminal of Truth.
Oh, I'm not very familiar.
So it kind of, the guy who developed it, some Kiwi in Australia, had got a few AIs to talk to each other and lock them in a room, essentially, and they start driving each other mad. They start developing a meme, just unencumbered by humans. They start developing a meme.
Yeah.
Then it goes, he gives it a Twitter account. It goes onto Twitter. It then says, it pings Mark Andreessen, said, hey, listen, I want to raise money for myself to build out this stuff and help out my human. Mark says, sure, what do you need? And he said, like 1 Bitcoin or whatever. Sends it a Bitcoin as a grant, and it ends up launching a meme coin that at one point was worth a couple of $1 billion. I mean, It was like, again, it was experimental, it was clunky, it was still a bit of human intervention, but you can see where it's coming, that AIs will be able to form capital in their own right to pursue certain activities.
And its only interface to the outside world was a meme coin?
Yeah.
And the Twitter account?
Yeah.
Yeah.
It's amazing.
Well, that's pretty amazing. Yeah. And imagine as the models get better and better, they'll actually be able to produce software, right? And so, yeah, you could have autonomous companies and products being generated.
And we'll have autonomous traders, and we will invest in them. And it brings it back down to the tokenization, the kind of crowdsourcing, the AI. It just feels like we're about to live through an incredible time. So my final question for you, which is the most important question of all, is when are you buying this CryptoPunk? You can't be in crypto and not have a CryptoPunk.
Yeah, I know. I kind of I've been late to the whole NFT punks and
the price has been going up as well. We've been telling you about this.
Yeah, I guess I still have to find one that looks enough like me. All the ones that look like me are extremely expensive for some reason. I have a very very desirable attributes if they were in punk form.
I love it. Vlad, listen, thanks so much. Really enjoyed the conversation, and good luck with the next year, because I'm sure it's going to be an exciting one.
Yeah, it was good to catch up. Thank you for having me on.
Absolutely.
It was a lot of fun.
Hopefully see you in the world somewhere soon.
All right, likewise.
So a great conversation with Vlad. I've got to know Vlad over time. Really lovely guy, really thoughtful. He understands what he's trying to do. And I think it's just really interesting to move away from just the standard stuff and pick people's brains on where we're going in the future, where this AI is leading us, how we're thinking about markets. And hopefully you got some of the insights into Vlad's amazing thinking. And I'll certainly get him back on again in due course where we can talk through more of these topics. But until next time, enjoy yourselves and be careful out there.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.